Good morning, everybody. Happy Friday. Today is May 15th, Friday the 15th. And this is QOL Trading Pre-Market Analysis for today. Very excited to get things going. Lots happening with this new indicator. Very excited about the results so far. If you've been watching some videos, I've been showing you that you can make money on both sides of the market regarding puts and calls. So getting into things right now. Before we get into it, if you are new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. In the comments, I put the address to our website. If you click on that website address, you can put your name and your email address in there and join our subscription for a free weekly newsletter that comes out on Sundays. We've put out 8 editions so far, and it pretty much gives you a recap of the week and what to look forward ahead in the week to come. So it's free. Just click on that link, QOLtrading.com. And then below that, we have another link there. It is actually a link to get onto the Discord, and it's through WAP. There's all kinds of problems with Discord, so we use a third-party WAP, but it gets you to the Discord page. You click on it. There's 2 selections. One to join the free. I would just, if you're new, just join the free Discord for now, and then after you see, how we work our Discord channel, and if you want to upgrade, you can upgrade to our live trading room. And in our live trading room, we do live trading options, Tesla options, and I answer any questions from 9:30 a.m. to 11 a.m. Eastern Time, Monday through Friday. So if you do click on that Discord, what you'll see is you'll get to this page right here. And here's our pretty much meat and potatoes right here. The pre-market starts with the pre and post-market analysis. Every morning I'll post a link, and you can click on this link. If you did not subscribe to the channel and get notifications on the YouTube, this will take you to where you are right now. Below that, you have the levels channel. And in here, if you want me to cover any different equities or futures, I'll put my levels in there, my best educational thoughts and, my homework that I put into things. But you got to do your own homework when it comes to support and resistance levels or supply and demand levels. I'd be glad to answer any questions how I make mine. And then, however, I don't cover any penny stocks. So only equities, only companies that are making money, or any futures. And then the link that I already put in the comments, this is where it's going to take you. It'll take you to this WAP page. And then once you get into there, if you want to upgrade to the channel, right here is where you're going to access the QOL trading desk. And then we do the live trading, and that's where you'll be able to see all the fun stuff and see us talking about everything new that we have coming online with this new indicator. So anyways, we will get right into things right now. I don't see any economic data on the docket for today. We all know that Trump is in Beijing right now. Actually, he may have left at this point. Had a few days there, and a lot of dog and pony show there. And everybody's got their own take on if it was successful or not. And then we'll see what happens. It doesn't look, I think right now there's a couple things happening. One, whatever kind of information comes out of this meeting with China, it's the first time they've been there in over a decade. So I don't think anything negative can come out of people talking. So I think it's a win-win no matter what, no matter how anybody deciphers what happened. But I think the bigger news on the docket right now is Powell's last day, and then Kevin Warsh is stepping in as new Fed chair. So that's going to have some impact on the market. Nobody knows how he's going to respond to his data, to interest rates. Everybody has their own opinion. It's going back and forth. I personally think that he is going to be a rate raiser in the short term. And if you go back and you look at the last several Fed chairs, the markets pull back about at least 10% when a new Fed chair gets into place. So this may be the catalyst that we're looking for to get some pullback from this tenacious grinding rally that we've had over the last month. So that being said, let's get into things. Here's the VIX right now. We have a little gap up from this morning down at 1732. However, there are some gap downs that have been there, one since the April 9th at $25.74. And then last one down up at $30.34 from the end of March. One thing to keep in mind right now, we are above the 20-day moving average at $18 and a penny. Kind of stuck in between the 20 and the 100-day moving average at $19.63. And then, of course, you got the 50 sitting at $21.69. As the VIX elevates, the equity markets are going to pull back. And one thing to note, too, we'll get into the to the futures in a minute, as far as the rally, it's a bit misleading, but we'll get there in a second here. Let's get over the oils. We'll get done with the oils, and then we'll get into the futures, and then we'll get on with our weekend here. So let's start with Brent crude. Nothing crazy right now. It's just kind of hovering in this little consolidation area here between $106.51 a barrel to $109 cents a barrel. So nothing earth-shattering right just yet. You definitely want to stay below that $109. Ideally, you'd like to get below this 20-day moving average at $104 down to $102. You do have a gap up. I would say the gap up is here from Friday. So I do have that in the orange line here down to about $100 a barrel. So that would be good if that can close that gap. That means that there's going to be less pressure on the oil. That is Brent. Let's talk about crude, which impacts us here domestically. Same thing. We have a gap up at $94.94, and that's from Monday. Still hovering below $100 a barrel. That's good. I'm okay with that. However, it's still impacting us at the pumps right now, so we'd like to get a little relief. Like to get us back down here at least to $87, and at least maybe back down to this 100-day moving average at $79.94. I do believe that if there is an agreement that happens, I think that oil is going to come tumbling down pretty quickly. So hopefully that happens. Anyways, let's get into the futures. If you're new to the channel, subscribe to the channel. Hit that thumbs up button and like this video. So here is a little bit of a flush that we're getting pre-market right now. So it's probably as news is filtering out of China, that combination with what I was saying earlier with Kevin Warsh stepping in and Paul supposedly stepping out, but we'll see what happens there. So we are hovering at Friday's high, and that is a weekly high of last week. Big level right here. If you lose that level, I think you're going to come down here to this 74.06 level. And then if you lose that 74.06, you have that weekly low of this week at 73.6350. Ideally, what I'd like to see a complete flush, not in one day, of course, but I would like to see us get back down here to this 71.85 level. I think if you lose this 74.06 level, 73.63 is probably in play for today at between 73.27 and 25. 73.27 and 73.63 could be in play today. And then, of course, you have this monthly, actually, it was a monthly low at 7,300. So that's going to be a psychological number also. So if you do pop on down there, I would look to maybe get some longs in that action right there. So, however, right now, as you can see, we are not. This is what I would consider consolidation. Maybe you could even drop down below right there, right? This is not. Now we're starting to flush a little bit, which is good. So maybe today you look for a little pop and fade. Here's this 161.8% Fibonacci extension that I have at 74.85. You can see it's respecting that in pre-market, kind of like a champ. So you could use that level. It's also a high. It comes in with the high of, I think, Wednesday. Yeah, Wednesday's high. So you could see that it's respecting there, and we're starting to fail right now. So I would say keep an eye on this 74.27.75 level. It's a weekly high from last week. If you lose that, you're going to get some more flush. So let's look at SPY. SPY is going to be very similar. All these charts are going to look similar now, right? Where is our weekly high of the 8th? So the weekly high here is, here's the 8th right here. It comes right in at 738 level. If we lose that 738 level, I think we're going to come down to this weekly low, 731.75 of this week. And then that's going to be a key level to hold. If you lose that level, then I think you flush down to 724.87, which is a weekly high, actually a monthly low of May. And then it's just above the 20-day moving average is 722.35. So some decent levels, some decent areas of a flush though too if you lose these levels. So take a snapshot of these levels, put them on your charts if you're trading the SPY, and use them. So right now, decent flush so far this morning. We did make our all-time highs here at 749.53, and we are getting that flush right now. So SPY is down about $10 this morning. So get over the NASDAQ. NASDAQ, same thing. Decent flush right now. We've been waiting for a flush like this, looking for a catalyst. Maybe this catalyst is coming. This is the news that's going to be coming out of China. Let's see. The 13th, Wednesday's low, 29,066 is a decent level. That's a line in the sand. If you lose that level, you have, where is Friday's high? Is this Friday's high here? No, we're below Friday's high right now. Friday's high was 79, call it 29,000, call it 29,400. Nice even number. You can see it's respecting that in pre-market right there. So as long as we're below Friday's high, not looking for longs, actually looking for pop and fades this morning. I would say if you pop into that 29,400, little fade out of there, see how the market responds out of there. It doesn't, just because I have these levels up there, doesn't mean that once it hits a level, if I say pop and fade, that if the market pushes up here, you sell right away. This is a 15-minute chart. If you're a trader, you have your longer charts to identify your thesis on how you want to trade the day. And then you drop down to your lower time frames. I go 1 minute, 2 minute for a trader to see how the market responds so you can get into those trades once it hits these levels. I would say right here, if you lose this 29,066 level, you'll come into last Thursday's high, sitting at 28,944. And then if you lose that, you're going to try to attempt to push into this week's low again, 28,740.06. So we'll see what happens. Again, pre-market, not a lot of volume in pre-market here compared to what happens during the regular market, but a little elevated though. You can see here, this is pre-market in this gray area, a little elevated compared to the previous week's volume pre-market, right? So you have to take this in consideration. Down here is where you don't look at the animation up here, you look down here. This is where your volume is set. So anyways, let's get into the Qs, and we'll get on to Tesla, and then we will get on with our weekend. So Qs, same thing on the Qs. This regressional trend line is one line that I like here. You saw how it responded on it on what was that, Tuesday or Wednesday rather. So I would say if you lose that level, then you come down to the 700 level, big psychological level. Then you come into the weekly low at 696.82. On the upside right now, you could see how this is just a flash wick. You see these every now and then. I would love to identify these flash wicks. They do seem to come back and retrace themselves at one point, but it's always the $1,000,000 question on when. I would say this morning, excuse me, I was up early this morning. Pop and fades is what we're looking for right now with this kind of flush right now, but you got to be careful that this market can turn on a dime with any kind of news. If this administration pays attention to the stock market, it's one of the selling points. So and one thing I forgot to cover too, even though we've had this tenacious rally for the last month, let's go to the 4-hour. The majority of the stocks are actually down. There's only like 10 to 12 stocks that are holding up everything and pushing higher. So I don't know, the main 10 stocks, we know what our stocks are. NVIDIA right now is pushing higher. You've got NVIDIA earnings next week. So that's a big catalyst. So I think that could be the last hurrah of the month for May before we start getting some pullback. You can see, I'd like us to eventually get back to this 20-day moving average of 677. It is good that we're above, so you could have a couple theses on your trading today. One, looking for a flush and looking for levels to get long, or if the market pushes early in the morning, look for a little kind of a pop and fade this morning based off of these levels here. So let's get back to a 15-minute. So again, take a shot of these levels. If we lose this weekly low of 696.82. I don't have much down here until you get to the 20-day at 677.35. So watch these levels today. And just because you're getting a flush right now doesn't mean all the world is coming to an end. It's healthy for these markets to pull back. Let's let me give 30-day here. It's real healthy for the markets to pull back. See, when you get the consolidation, these are levels where the market, if it breaks and retests these levels, this is where the trading action happened right here. And this is where you can get confidence. And you can see this consolidation level right in here from the 24th of April. And I would say probably right here to the first week of May when we popped out. This is considered like a long-term break and retest. So if we come down to these levels, 670, 735, good level. Even below that, 660, 664. I've been talking about that level for a while. So take a shot at that. Again, above what we have over here, we do have a higher end regressional trend line if the market does pop into 749, right? That's going to be a decent level if you break through this all-time high at 722.03. So anyways, that's it for the futures and for the SPY and the Qs. Let's get into Tesla right now. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Beautiful levels that we're holding right now. This is the weekly high here from last Friday, 431.20. Big line in the sand here today. This 430.21 is the weekly low of this week. So you got to watch that level. Excuse me, that's not the weekly low of this week. That is Wednesday's low. Weekly low right here is 422.26. So if we lose 430.22, I think we come down to this 420 between 422 and 424. It'll test the weekly lows. You can see what we did yesterday and what we were talking about yesterday. This is a 30-minute chart we're looking at right now. Let's get on a 15. So I pointed out yesterday, going into yesterday's open, that we had the speed zone right here, this line in the sand, 443.5. So it dipped below it earlier in the day, and then it held above it, and now you could see we are below it, and unfortunately, it filled that speed zone before the market opened right now, right? But now you could see, I could have extended this speed zone all the way down here, right, to where we are right now. But if you look too, I haven't drawn it on the charts. You have some more speed zone down here, right? These were speed zones that were filled. It didn't quite come all the way down to fill this last piece of the speed zone, right? Speed zone is when you have a straight up move and it's not choppy, meaning the choppiness will be buyers and sellers kind of battling, right? So I would say if you lose this 422.26, you come down to this 414.5 level, right? You can see that, right? Here's another fantastic speed zone that actually did fill, right? You could see, I think I had it on the charts immediately, right? So it filled this speed zone, right? This big 15-minute candle straight up, came down, and if you look where it lines up with the previous 15-minute candle, it filled that speed zone and then went higher. So I would say right now, your speed zones that you have coming into today, it's going to be this one right here. This is the last speed zone that I see up top here to be filled. So 422.26, we come down to 414.5. We're line in the sand today, obviously, is going to be this weekly high of last week. We're sitting at it right now, 430.20. And then if you get above it, you could consider this a little bit of a speed zone on the top here. So if you get above the 435.79, you can get yourself $4 maybe popping in this 439.74. And then if you got above the 439.74, you have this 443.5 level, of which I had here. I had here from what was that? Wednesday's kind of break. It's a break and structure level that I had here, and it's looking pretty nice actually. So if you do get that pop, I'd look for kind of pop and fades right now. So big level right here. Got to hold this 430.21. If you lose it, you come down to the 424.06, and then if you lose the weekly low 422.26. 414.5 is your next target that I have down there. So that being said, let's go over some fun stuff that we have going on with this new indicator that we've been trading off of. And it's really been fantastic, people. It's just really, really fun. Let's get on the 5-minute because this is what we trade off of. So if you're in the trade room, you could see these trades are activating on both sides of the market, and they're identifying, because I built my code based on puts and calls, right? So if you're trading the equity, you can utilize it for the equity too. Just the wording that we have on it, it's right here. This arrow coming down is telling you to enter a put, and then it identifies your price levels, right? So the first price level yesterday, what's this yesterday? This wasn't yesterday. That was not yesterday. I apologize. Does that look too low for a price? So here we are for yesterday. Yesterday was a fantastic day. So what happens on this, all these lines that we see up here, these are all generated from the code that I built, and or the script that that I put together. Script code, you can call it the same thing. So what these lines are, this right here identifies the high of the pre-market, this dotted line right here. And then there is another dotted line. Where's that other dotted line here? I know it was a big one. Maybe it wasn't the big one. Oh, right here. And this is the low. So this identified, oh, excuse me. Here was the low of the pre-market right here. And here was the high. So those dotted lines identify where the market is before it opens. Some people trade off of those levels. This green dotted line and this red dotted line identify the 5-minute opening range, and it plots it right here. Gives me my numbers, 443.21 and 447 was the 5-minute opening range. Now these arrows and the text here, this is all computer written. This is all computer generated. So yesterday it gave us a signal once we broke the 443.21. And then what happens is the market's going down. It shows our price targets, right? Our price target was 439.42 was our first price target, right? So that you can base your trades. Here's an early entrance. The tiny arrows give you an early entrance on a trade, and the big solid arrows, that gives you the the big entrance that, okay, well, this is, now you're getting volume coming through here. This is when you take the trade. So now you're in the trade here. You could set it for your first price target right here, but then the script identifies exit your put. So it tells you the market's pulling up, it tells you to exit your put. So this is the first sign that, okay, well, these puts may not be in play anymore, right? But then once you get this yellow square I've been identifying, this has been a catalyst where you can take a trade off of this yellow square instead of waiting for your breaks, right? So there's all kinds of trades that I'm making on this, just trying to figure it out. However, I am trading off of this right now when it's giving me my signals, because it's just complementing what I do anyways. I base my entire trade book is off of this 5-minute opening range, and then I have my basic trades and my advanced trades all based off of this, right? So right in here, this is where I find during the day, sometimes you get some choppiness. You can see right here, you have a double signal. Early entry on the call, early entry on the put. However, following this candle right here, you got that yellow square. The yellow square was telling you that your puts are done, and we are above this gray line here is the midline of the 5-minute opening range. So you're higher than the 5-minute opening range. So you could base your trade off of that, right? So you could have gotten in here. Then it gives you an early, then it gives you an early call entry, and then your first price target came up here at 450.79. So there's about a $3 move. It gave you an exit right here, and it tried to pop up to get to that second level of take profit, but it still told you that exit right here. And then on this candle alone right here, here's another yellow square telling you your calls are done, right? And then you follow it throughout the rest of the day, and it's still giving you signals for the rest of the day. So very exciting. You can go back and you can look at the previous day. The previous day gave you some fine action as well. Same thing. You had some. You could have made some money on your puts. It didn't quite get to. Actually, it did get to that first price target. Yes, the previous day, and then it rallied back, and then you hit both price targets on the top side, right? So very exciting on this indicator. We will be marketing this indicator. We do give this indicator to our students. So go on to the website, take a look at the website. If you want more information about it, drop me a little note, and I'll be glad to have a conversation with you about it offline. Aside from that, let's get into what we're going to do for today. So for today, we are going to start out with today's expiration date, and we're going to start with the 435 calls and the 430 puts, right? So You could see where the 430 puts closed. They closed at $1.15 premium. But now that we are significantly lower than yesterday's close, these puts are going to be opening up, I would say, at least in the threes, maybe mid threes. And then these 435 calls, you could see, oh, excuse me, I have these, 435 calls. They closed at $10. These are going to be in the threes, maybe high twos, because we are well below that right now. So we'll see how the market's going to perform after the first half hour, 45 minutes of expiration of 0 days till expiration. I may switch till Monday's expiration, buy myself a little more time, theta, so the premium prices won't be so whippy. And so then what I'll do, I'll expand the strike price. So seeing how the market moves, I may go to maybe a 450 call that expires on Monday, and maybe a 425 put that expires on Monday. So just pop into the Discord channel if you are not a member of the trade desk. Join the trade desk. It's a nominal fee, a monthly fee, and you will see the live trading from 9:30 a.m. to 11 a.m. Eastern time. If I don't see people in the trade room, I will see you over the weekend. I'm going to make a video over the weekend. And then also, don't forget, go to the QOL website, put your name and email address in there so you can get our weekly newsletter that comes out on Sundays. We are on our 9th edition already, so I can't believe how fast time flies. So anyways, trade small, trade smart. Have a great weekend. Don't ruin your weekend. Talk to everybody soon.